What's going on, guys? It's Nick here for Stock Bros, bringing you the second entry on our thread of videos on register accounts. If you haven't checked out our last video on TFSAs, go check it out. It's the last video. I'll attach the link down below. But for this one, we're going to be exploring the different intricacies of RRSP accounts, which are also a type of tax shelter accounts. But yeah, without further ado, let's dig into it. Alright, so for the purposes of this video, I've created this little schematic that contains really what are the main points for RRSP accounts, some examples, as well as differences in when we can actually use this account, or actually rather when it's advantageous for us to use this account over other accounts like TFSAs. But first things first, I guess we should define what an RRSP account is, and this stands for Registered Retirement Savings Plan. From the name, you might think that this is a savings account, but it actually, much like the TFSA, it's also an investment account. Now, as we'll come to notice later on, RRSP accounts work a little bit different than your TFSA account, which is the one that we explored in the last video. RRSP accounts are all about tax deferrals. So whereas the TFSA account, it's an account where you can exempt yourself of paying taxes on certain amounts indeterminate of the amount, well, indeterminate of the period of time within a certain margin or limit of contributions. The RRSP account works a little bit different in that the contribution room is a little bit bigger, but you at some point will also have to pay taxes on those funds, and I'll get more into it, but I guess that's just the first difference that I wanted to draw between TFSA accounts and RRSP accounts. So the concept of RRSP accounts was introduced by the Canadian government in the 1950s, I believe 1957, as a way to incentivize Canadian citizens to start putting money away for their retirement, and not really just to save this money, but also to try to invest it so that when at a later point when retirement came, that you can have a successful plan to keep having funds even though you're not in your hardest working years when your revenue is the largest. So in this way, it's a little similar to the TFSA account, in which both accounts were introduced by the government to make sure that Canadians have a room and a possibility to grow some money aside. But of course, these two plans or these two accounts are different in certain ways. With the RRSP account dealing more with tax deferrals, which is actually the whole key for RRSPs. But before we delve into that, I do want to give a little bit of the already mentioned benefits for the RRSP, which also being a tax shelter plan, allows you to not have to pay taxes on things like capital gains, dividends, and interest from bonds, which is also something that the TFSA account provides. However, the way that the RRSP account provides this works a little bit differently. So the main key to realize here is that RRSP accounts are actually tax deferral plans. I'll explain a little bit how the taxes are deferred till a later point. But the way that this is built is with contributions, your contributions are actually being tax deductible. So how does this work? So if we use a real case scenario, we'll come to see that, let's say that in a given year you made $75,000. Which allows you to fall on a federal tax bracket of around 20%, making you owe $15,000 at the end of that year. This is just a rough estimate. But let's say that on that year you actually also open an RRSP account and you made a contribution of $5,000. You can actually take this $5,000 and subtract them from the $75,000 that you made that year. In the eyes of the Canada Revenue Agency, you have now only made $75,000, or at least that will be the new amount that you'll have to pay the 20% taxes on, which essentially reduces your owing amount from $15,000 to $14,000. Eventually, this difference will be reimbursed to you via the tax return once you file your taxes. But this is sort of the system that allows us to build the RRSP account. Will actually also getting that benefit of the gains or those contributions not being taxed. Now, it's also important to realize that you can't really grow RRSPs forever, unlike TFSAs. So when you actually turn 71 at the possible age of retirement, the RRSP account becomes an RRIF or RIF, which actually stands for Registered Retirement Income Fund. So at this time, you actually have to start taking your funds out of your account. And this is actually when those funds also become, the previously deferred taxes where we actually were growing these funds, now they're being taxed. So that's in my consideration, it's a bit of a disadvantageous part. But it's the benefit with this is that at this time in your life, you're not going to be making as much money as you were during those years when you were growing that account, which then allows you to have to pay lower taxes on those funds. Now, the second point to explain in terms of the range of contributions that you can make to your RRSP account in order to grow it is that there are limits to the contributions. This roughly works to around 18% of your previous year income to a maximum of, I believe, $26,000. This is just another point to contrast between the TFSA account and the RRSP account is that in the TFSA account, if you guys remember from the last video, you had a contribution limit which is fixed every year for about $5,000 to $6,000, except in that odd year 2010, I think, when it went all the way to $10,000. The case here with the RRSP account is really more subject to you and the type of income that you have, which also makes it more advantageous for the more money you take. Equally, if you have a modest salary, then the RRSP account doesn't become so much of a viable option, or it's still a viable option, but you wouldn't really enjoy its benefits as much as if your salary was a little bit higher. Now, to put it all together, I have this comparison chart here where we can actually understand what happens if you successfully invested all your money and you use an RRSP account as a means to save this money or to grow that money, of course being tax-free or tax-deferred, if you will. So in these two cases, let's say that two individuals have two different RRSP balances. The first individual has a balance of around $70,000. At age 71, this individual has to have a mandatory withdrawal every month of around $3,690, which works by the percentage. I think it's around 5.98% that you have to take out every year. This second individual here has a balance of $370,000. So at age 71, this individual has to take out around $19,000, almost $20,000 every month in order to make his RIF, in this case, a valid account. Now, of course, by the time that these two individuals have to take that money out, that money will be fully 100% taxable. So that's one of the drawbacks from the RRSP account. But hoping that at this time, you don't have to worry so much about working, but you can actually enjoy withdrawing that money, regardless of how big your RRSP balance is. Alright guys, so that concludes our explanation of how RRSP accounts actually work, how we can grow these accounts and enjoy those tax sheltered benefits that come with it so that we can actually invest and make savvy decisions for once retirement comes. Of course, if you want to have a better contrast of this account and the TFSA account, I do suggest that you check out the Wealth Simple page for RRSP accounts, which contains a lot of different details, things more related to how it works along filing your taxes. What I wanted to do in this video is sort of incorporate the trading or the investment part into growing an RRSP account. Now, for the rest of this series, I want to focus on doing videos on explanations of financial terminology, not only, of course, for register accounts, but also everything that comes to the lingo that we use in everyday trading. This is something that you guys are interested in. You guys can let me know, or if you guys have any other ideas for videos that Renan and I can make, please don't hesitate to leave a comment down below. But yes, this has been everything. Thank you so much for watching. Don't forget to like and subscribe. Until the next